In this video, traders, I'm going to talk about a losing gold trade. Stay tuned. Hey guys, a very warm welcome to you. All right, thank you for joining me. Those of you who may well excuse my creaky chair. I've had this trusted fella for very many years. Those of you who've watched the video before, I talked about a winning gold trade, $20 worth of move. Nice trade, worked very, very well. You may well have come to this video to see my losing trade after that. Fortunately, this was only a $6 loser, which, you know, one contract, we're talking about $700 or something, or $600. Not the end of the world. But what I wanted to do for kind of just to show both sides of the coin, again, show through my thinking, my thought process behind taking the trade, why I took the trade, why I came out where I did, and to show that, hey, listen, it's nice to get those $20 winners, which, you know, one contract's a couple of grand, very nice. And if you get a $600, the order of magnitude doesn't matter, and the quantity you're doing doesn't matter. But if you're doing that all day, every day, you're doing well, right? 3 to 1, fine. You can lose constantly, losing that amount and making that amount. And if you're continuing to do that over markets, that's how trading should be working. And so let's have a look at the screens now, and let's talk through the trade, let's talk through the setup, let's talk through why I took it, why I came out, didn't I do anything wrong? Let's analyze it as I have done, and kind of share it with you guys and maybe pick up some bits and pieces. All right, let's hit the screens. Before we do that, I just want to, this chart, guys, I was looking at here, make sure we're in the right time frames for it. Okay, so we're in gold now. I'd already taken a long gold and I'd had a nice exit on this. And now I'm looking at gold and I'm still reasonably bullish. We're in a bull flag scenario. I'm mindful of the fact that we faked out, but very often, you know, especially with the thicker stuff, we're going to get this scenario: a fake out, a test, and then a go. So I'm still bullish. We're not kind of like we're taking out the lows here. I've got to still respect the fact that, you know, we're in a bull run here on gold. We are at highs, even though we've kind of rejected. I think you'll be careful about putting too much weight on rejections. Yes, they're good and you can trade them, and yes, you've got to pay attention to them, of course. But in the scenario of this, look at, guys, it's the daily chart, by the way, on the left. Look where we are. You know, we're at multi-year highs here. That's not a bearish, even if we're getting a very short-term bearish move. So daily chart on the right, 50-minute chart on the left. So here we are now. We've come down off this high, and I'm starting to look at this, and I'm starting to think, okay, this is good. Let me zoom in here. Let me clear some of this off, guys, so we can see. I'm trying to hopefully conceal this. I'm starting to think, okay, great. We've got 1 down day, 2 down days, 3rd down day. I'm seeing this, and I'm pretty excited when we start to dip back up. And I'm putting on my notes. Saying, I thought this was another fake. I gave it time. Reviewed it, and this was after the trade. I thought this was a fake. That was my thing. I circled this price action literally right here. I think this was a fake, and we started to push back up, and I was buying here, right? So I waited till we had this, and I kind of started. No, sorry, I was buying just before this push here. So I was waiting till we pushed up, and I was buying here. Okay, with the expectation that this was a fake on our 15-minute chart, and actually I might be better putting on an hourly, even though I didn't actually use an hourly, just for the sake of this video, so we can see stuff a little bit more clearly. Yeah, here we go. So this is what I thought. I thought, okay, and by the way, the vertical line you'll see on the daily chart as well. So we're in this period here, and we're starting to push down. 3 days of down move after, but I thought, yeah, shaking out a lot of people. All the people who bought at 50 are getting hammered here. They're not happy. Then we faked out to the downside, took out this kind of cluster of lows, a little bit of a dip under that low as well, all good, and we started to push back up. So now I'm interested, right? Now I'm interested, and I'm long. So I'm getting long, and I'm looking for us to push, ultimately, see if we can retest those highs again. And we go along, we chug along, and my stop is going to be down here, by the way, because I've got a reasonable risk reward ratio on this trade, and I think there's a decent high probability as well. So my stop's under this low here, my entry's coming in here. I can take that as a $10, $12 stop, whatever it was. I didn't write down the stop level here. I wrote down the exit, but not the stop level. Yeah, the stop level was actually under that low. So yeah, it was what it was. But you can see the multiple of risk reward was good. We start to push up, great, and then I leave the trade. I'm like, okay, I'm going to leave it. I'm just going to review it every now and then. And we break out from this high very slightly, it all looks good, but then it fails. So when I come back in and I check the market, and I'm checking it, I think it's around kind of 6 o'clock or something like that. What's the time I ended up exiting it? Yeah, around 6 o'clock. So I've given it kind of 5 hours or so to move. And then around 6 o'clock, I'm down around $6, $5, $6 on gold. And I decide to cut it. So I don't let it hit my stop. Why do I decide to cut it? So you can see on this chart, guys, it doesn't do what I think it's going to do. The price action is telling me a different story. Now, as much as I'd like to sit here and sit through it, it doesn't make any sense. You know, my thesis is this is a fake out to the downside. This is kind of faked out a few people. We've had the run from the high to the low to fake out people from the upside. Now we're faking out people to the downside. We're ready for an extended move, perhaps back up to that 1450, and maybe a breakout further. But I'd see what we got when we get there. You know, I'll take that nice $30 trade all day, every day. But when we start to break out of here and we start to fail and roll back over, that's no good, man. That's not really conducive and in line with my thesis. So I have to cut it. So I cut the trade. Like I say, small loss, no problem at all. But the point is, guys, is that, you know, when this is often a question I think that comes through in the comments, is that, you know, when you cut a trade that's not working, when you hold for the stop. Now, I had a very specific evidence there that the trade wasn't doing what I wanted it to do. Now, if it had just drifted down to my stop, I would have been stopped out for the full stop. But the fact that it went in my direction, I didn't have a trailer stop, I didn't have anything like that. But the fact that I reviewed it and went, you know what, we faked out again. We're in a fake out market. You're trying to push for an explosive move. It's not ready yet. You need to cut it because this is catching people left, right, and center. And so the market conditions aren't in line with what you're trying to achieve. Cut the trade, take the small loss, no big deal. Yeah, $5 or $6 loss, no big deal. Look for the next trade. The point is, guys, is that, you know, if the market isn't doing what you want and it's very obvious, then maybe you consider cutting it. Just because the market's not got quite to where you want it to go yet doesn't mean you cut it. But if there's some kind of price action that dictates or suggests the conditions aren't what you're aligning with, then's the time to ditch it and cut it. Anyway, guys, I hope that thought process has maybe given you one or two things that perhaps you can take away as you're trading and helped a bit. Again, losing trade, but you know, this is the real world. You know, we just lose some, we win some, we lose some, we win some, and hopefully at the end of the month and the quarter, we've got a nice account balance that's higher than it was at the beginning of it. That's the deal with trading. That's what we're trying to achieve. So go and check out that video I did. We talked about that winning trade, which was nice. Very similar type of trade, very similar type of setup. Could I have looked at this and gone, oh, well, we'd faked out once? Was it a little bit more risky? Possibly. I still think it was a good trade. Happy to have taken it. Very pleased with my trade, and even on my notes I put good result. Though as I cut this before more damage because I saw the price action change. I've even written that on my journal. Happy to have taken this all day long because I know that if I do this and I keep taking those good trades, over time it's going to work out, guys. That's the whole point. And that's what I've learned after doing this for whatever it is, 17 odd years, is you just got to keep pressing and keep executing your strategy and system and not get annoyed by it, not get bothered by it, but just see it as good discipline and good read of the market when you do get stopped out for a relatively small loss. All right, guys, take care, and I'll see you in the next one. Bye-bye.